Yes, doctor.
Is it? Sorry. Till now it was
Yeah.
not there. Okay. They say that if see there are things. I will put this as a reference. Okay. I will put this as a reference so that it will be easy for us to know from where we got this. Is it? This is with respect to this one. Is it right? What is the bonus fraction if we are issuing for 1 for 5? Okay. The bonus fraction will be what? The bonus fraction will be 6 by 5.
On 5.
Okay, the bonus fraction is reference to the line which I have mentioned. Is that fraction of the year? 1 to, see, they are issuing on 1st April. Till 1st April, whoever is there in the shareholders, they will get the bonus issue. Is it? They are eligible for bonus issue. They are eligible for bonus issues are how much? 300. Is that they are eligible for bonus issue is how much? 300. Now, you see how much you will get. Just calculate 1 million times 6 divided by 5 times 3 divided by 12. It comes to how much? It comes to how much?
300,000.
300,000. This is 1 million shares. Okay, when they have issued, is it right? When they have issued how many shares? They have issued full market value. Is it right? They have issued how many shares? 200,000. Means by 1st April, okay, by 1st April, how many shares will be there? The shares will be 1.2. Is that the shares will be how much? 1.2 million. Fine. Just once we complete the second stage, you will understand the complete picture. Is that now again? What they say? They issued on 1st April, followed by 1 for 5 ish, followed by 1 for 5 bonus issue. When they have issued bonus issue again? They issued
August.
Okay, they issued how much? They issued August. How much they have issued August? They issued in August. Is it right? 1 for 5. Is it right? 1 for 5. Is it 1 for 5? Means how many shares are there here? 1.2 million. Is it at 1.2 million? 1.2 million divided by 1.2 million divided by 5. How many shares you are going to issue?
2,400.
24,000.
24. 24,000.
240,000, dear. Check.
Yes, 240,000.
240,000. What is the bonus fraction followed by 1 for 5 bonus issue? Is that again 1 for 5 means 6 by 5. Okay. Now, how many months will be their fraction of the year?
5 months.
August. Is it right? August. August means
4 months.
how much?
4.
August, September, October,
December.
November.
December.
1st January, 1st April, 1 minute, 1st April. You from where we have to count, from when we have to count it? When we have to count it? From April, is that, see, the first one we have counted, listen carefully, first one we have counted from January to March. Okay, next we have to count from April to August. April, May, April, when they have issued, April, May, June, July. How many months are there?
4 months.
4 months. See the things. First we have to calculate from January, February, March, 3 by 12. Next, they have issued on August 1st, means April, May, June, July. Okay, April, May, June, July. How many are there? 4 divided by 12. Any doubt you ask me, okay? First I am writing here very clearly. Is that you see how much you are eligible, that much you have to write. See here, from April to August. Is that April to August, 4 by 12. Now, how much is the total amount is there? How much is the total amount is there? 1.2, 6 divided by 5, 4 divided by 12. It comes to how much? (1.2) times 6 by 5 times 4 by 12. It comes to how much?
Four 4800.
48000.
Zero.
Okay, 145. How much is the total? 1440. Okay, 1440. Okay, now what they say, with a further 300, is that this is the first one, is it right? This is the with a further 100,000 issued at a market value of how much? On when they have issued further, it is a further issue, is it right? When they have issued, they have issued on 110, is that 110 2001. How much they have issued? 200,000 shares, is it right? 200,000 shares. What now? They have not said anything with a further of 300,000 shares. How much is the, from, if we take October also, October, November, December, how much is there? 3 by 12. Why we are not taking fraction here? Why we are not taking fraction, bonus fraction here? See the things. I am making it very clear. They issued, I am putting it in purple color, okay? I am putting it purple. They issued 200,000 shares at market value on first, comma, followed by a 1-for-5 bonus issue on 1st August 2001. Followed by, okay, followed by 1-for-5, means the first one they have issued 200,000 shares as a market value. Is that what is the fraction? Fraction is 1-for-5, and immediately bonus issue and followed by 1-for-5 bonus issue of how much? On 1st August. That is the reason here we have taken the fraction, here we have taken the fraction. With respect to the last one, with a further 300,000 issued at a market value of how much? 1st October. Here you don't have any, they have issued at the market value. They have not mentioned anything as such. Is it? They have not mentioned anything as such. Is it? Are you clear about this? Yes or no?
No, doctor.
No doubt. I just that is the reason I'm asking you. Okay, I'm asking very clearly. What they said. See the thing. An entity had 1 million shares. When it has been 1 million shares on 1st of January, they issued 200 shares at market value. Is it? They have issued 200 shares at market value. Is it right? These 200 shares they have issued. Is it? This the 200 shares they have issued. Now. What they have said that on April 1st, they would, is that with followed by what? Followed by a 1 for 5. Is that? Followed by a 1 for 5 bonus issue. 1 for 5 bonus issue. 1 minute. 1 for 5 bonus issue on when? On 1 for 5
First
bonus
of August.
issue on 1st of August. On 1st of August. Fine. With a further 300,000 issued at a market value on 1st October. Fine. Now. Listen carefully. See the thing. If you have an issue, is that this is very important. I am very slow on that. Okay. If you have an issue of shares at full market price and a bonus issue. Okay. You have full market price and a bonus issue. You apply a bonus fraction from the start of the year up to the date of bonus issue. Is that you are saying that if you have a full market price and a bonus issue, is that you have to apply a bonus fraction from the start of the year up to the bonus issue. For example, if the bonus issue was 1 share for every 5 share, the bonus fraction will be 6 for 5, as everyone who had 5 shares will now have 6. Is that who have 5 shares will now have 6. What they are saying, you have to apply the bonus fraction from the start of the year. From the start, that is the reason. That is the reason. See what happens is that when you have 1 million shares, okay, you are issuing 200 shares, issue of 200 shares. Now 200 shares is fine, 1.2. Again you are issuing, when you are issuing bonus shares, we are issuing the bonus shares on 1st August. Is that you are issuing the bonus shares on 1st August. If you are issuing the bonus shares on 1st August, you have to apply the fraction from the start of the year. Because see the thing, you are issuing the shares, the people who are in the beginning, they are also eligible. The people who joined in between, they are also eligible. Okay? The people who are in the beginning, they are eligible for 6.5. The people who joined recently, 2000 shares are there. They are also eligible for that. But what they are doing, we are taking, these people are eligible for, shareholders eligible for 3 months, these eligible for 4 months. Automatically what happened? 1 million shares, they are eligible for bonus shares. The total shares will be 300. Here what's happening? You are issuing another 240 shares. They are eligible for how much? 6.5. Means phase wise eligibility will come. The people who joined in 1st April, that is the 240 shares, they are eligible only for the 4 months starting from April, May, June and July. Is it? Starting from April, May, June and people who are from the beginning, we have 3 months are there, 4 months are there. Total how many months are there? 7 months are there.
7 months.
Okay, that is the reason we have taken the fraction as per the rule. If you take only 6.5 here, just imagine the second one means you are ignoring the first one. We cannot do that. Okay, whereas after this, how many they are issuing? They are issuing 200,000 shares. Now what will happen? 1440, is it at into 3 by 12? How much you will get? No. How? This is not 3 by 12. How much is this one?
4 by 12.
No.
Yeah, 7.
No. From where? See, January
5.
to March. Okay. April to
6.
August. Here what will happen? September to
September to December.
October.
October.
Is it right? Continuation is there. September to October. How much will get?
2 months. 2 months.
2 by 12. How much you will get? 2 by 12. Calculate how much you will get.
Two 4,000. 24,000.
Is it? 2, 4? By that time you focus on column number 4. Okay, continuity has to be there. January to March, April to August, September to October. Now how much you have issued? You have issued how much? This much. It comes to how many shares we have issued? 300. Sorry, 1740. Is it right? 1740. This 1740, what will be the fraction? This will be from when? This will be from 1st October. Is it right? This is September, October. 1 minute. They have issued on 1st October. August. 1 minute. 1 minute. 1 minute. January to March, April to July. Is it right? April to July, because 1st October, okay? April to July. Here August to September. Is it August to September? Because 1st October, is it right? 1st October. Now October to December. October to December. How much is there? 3 by 12. How much is there? 3 by 12. Can you please understand what we are doing? Listen carefully. I am here, okay? I am just starting from the beginning. 1st January 2001, 1 million shares, okay? They have issued how much? 200, okay? They have issued 200, 1st April. Again on 1st August, they have issued how much? 240 shares. They have issued for 240 shares. If they are issuing the bonus issue, If they are issued, there is only one bonus issue is there. Keep it in mind. There is only one. This is the only bonus issue. Is that this is the only bonus issue? If they are issuing the bonus issue, they have to take the bonus fraction from the beginning.
Fraction.
They have to take the bonus fraction from the beginning. We have to take bonus fraction from the beginning, 6 by 5 and 6 by 5. Now, what is the fraction of the year? January to March. Okay, January to March, 3 by 12. Is that this step is clear for you? 300,000.
Yes, doctor.
Next, they have issued bonus shares, 6 by 5 fraction. Now, these people are eligible for the next 4 months. Is that these people are eligible for the next 4 months, 4 by 12, from April to July. How many shares are there? 480. Then again they have issued a full market value. They have issued a full market value. How much they have issued? 300,000. When they have issued it on 1st of August. 1st of August means August and September. Fine, August and September. Because there is another issue at October is there. Is that we have taken August and September, 2 months. Now 3 plus 4, 7. 7 plus 2, 9. 9 plus 3, how many months? 12 months. Is that 9 plus 3, 2 months. These they have issued from in the month of August. From August to September, how many proportionate shares are? 250. Then at the end of the year, is that they have how much? 1740. 1740. But these people are eligible for how many months? These people are eligible for only 3 months. Is that 1st October? 1740. Is that 1740 times how many months we have to get? 3 divided by 12.
3 months.
How much you will get? 435. Is that 435? This is the total. Is it that?
Yes.
This is the total. Now what is the total of this? $300 plus 480 plus 240 plus 435.
145500.
1455,000. Is it right? 1455,000. Now, what is the earning per share? Earning per share is what is the profit? Profit divided by number of shares. Profit is given in the question 220 divided by 1455,000. It comes to how much? $0.1512 or 15.12 cents per share. Is it little bit clear to you all?
Yes, doctor.
Is it little bit clear to you? Okay, we will work on this. Okay, now, okay, rights issue. Rights issue is what? Rights, see, bonus issue is different, fully paid shares are different, rights issue are different. Means rights issue is nothing but for a rights issue presents special problems. They contribute additional resources, means they will contribute value also. is that they contribute amount also. They are normally priced below market price. See what happens. See, you have a simple example. 10,000 shareholders are there. Is it right? You are want to issue another shares. First, you will give preference to existing shareholders. You will say that the market value is 2 reals. Okay, this is the market price. Is 2 reals. Now, what you will do with respect to right issue? Will say that if I go to the market and I will have some more expenses. I have to make a promotion. I have to give commission, a marketing, everything will be there. I will not do that. I will say that if I will give a rights issue, same assume 1 share for every 5 shares. Is that 1 share for every 5 shares? Now I will say that the company will say that no, I will not pay for 2 reals. Is it that I will issue for 1.7. I will issue for 1.7. I am not going to incur any expenses. I will give the benefit to you only. Is it right? Whatever I am spending in the market for additional expenses, that expenses I will save my expenses, and the same I will give the option to you. Existing shareholders have the right. They can purchase, they cannot purchase, but they have the right. If you have 5 shares, you are going to purchase 1. You have eligible to purchase 1 share. Therefore, the combined characteristics at full market price and bonus issue, the calculations of the full market price and the bonus issue, is that will be reflected here. What we are saying, adjust the bonus element in rights issue by multiplying the capital before the rights. Okay, before the rights. Market price before issue. Is it right? Market price before issue divided by what? Divided by theoretical X price. Is that theoretical X price? Fine. Theoretical X price is very simple. It's not difficult. Okay. Where it is difficult, I will tell you. Theoretical X price is very easy. Okay. Now, they say that how you have to calculate theoretical X price. TERP. Okay. TERP. What happens? See the thing. If, for example, read this one. If there are 1 for 3 rights issue, is it right? For how much? $3. And the market price is how much? 5. Market price is 5. Issue price, new share issue price is how much? 3. You have 3 shares. Is that? You have 3 shares. You multiply 3 into 5. It comes to 15. You are getting how much? 1 share. 1 share into 3. Is it right? 3. How much you will get? You are having how many shares? You are having 4 shares. And you are having total value is how much? 18. Total n number of shares are how much? 4. Total value is how much? 18. Now what is the theoretical X rights price? Theoretical X rights price is total value divided by total shares. How much you will get? 4.5. Is it right? Now, I will give you an example here. Okay, I will give you an example. You are saying 4 for 1. Okay, 4 for 1. Market value is how much? Market value is 2.6. Is it right? Theoretical X price. New share value is how much? This is the market value of the 4 shares. The new value, new issue is how much? New issue is going to be assumed 2.1. Is it 2.1? Theoretical X rights price. Is that theoretical X rights price? 4 into 2.6. How much you will get?
$10.4.
10.4. Okay, 10.4. Next, 1 into 2.1. How much you will get? 2.1. 12.5. Okay, theoretical X rights price equal to 12.5 divided by total, how many shares are there? Total 5
5.
shares are there. Is it a total 5 shares are there? How much will get? 12.5 divided by 5. It comes to what is the price? It is 2.5.
2.5.
Are you clear about this?
Yes, doctor.
Is that this is the theoretical X price? Is that okay? Now that's what it says. What we have to do? First we have to calculate the step 1 theoretical X price. First we have to calculate theoretical X price. Second we have to calculate what is the fraction, bonus fraction, market price divided by theoretical X price. Step 3 we have to calculate weighted number of shares. Step 4 we have to calculate EPS. Is that first? Then you have to calculate EPS. Fine. This much we have to do. Now we will see an entity issued one new share for existing 2 shares. 1.5. Issue price is how much? 3 riyals. $3. Okay. Now they have the opening balance. How much? We have to see. When you are doing this, we have to take the full price. We have to take the bonus issue. Both we have to combine the rules. Is that both we have? Profit attributable how much? 550 and 460. This is the example 1 or 1, I think so. How much is the number of shares on 31st December 2008? 1000. First, what is the step 1? We have to calculate theoretical X price. Is that how many shares? 2 shares into 3. It comes to how much? 6. 1 share into 1.5. It comes to how much? 1.5. This is the step 1. Is that what is the theoretical X price? Theoretical X price is 2.5. This is the step 1. What is the step 2? Step 2 is nothing but the market price divided by theoretical X rights price. This is the bonus fraction we are going to calculate when it is a rights issue. Step 2. Step 3 is nothing but what is the bonus fraction, what is the time fraction, what is the shares. Is that this we have done with respect to what? This we have done with respect to the bonus issue. Is that beginning 800, we take the bonus fraction, what we have calculated in the step 2. Is that what we have calculated in the step 2? We will take the time factor and we take the shares. Automatically what will happen? We will get the total number of shares. EPS is nothing but the profits divided by total number of shares. Is that these are the steps? 4 steps are there. Again I will repeat. First we have to calculate the theoretical X price, bonus fraction. What is the bonus fraction here? Market price divided by theoretical X price. Then we will take the weighted number of shares. The last one is we will calculate the earning per share. Okay, they have given one question here for us. Okay, they have given one question. Question number 4. Is that this we have to, we'll start from here. Okay, now step 1. On 31st December, they issued a share capital. Issued share capital consists of how much? 4 million ordinary shares, 25 cents each. On 1st July, the entity has made a fraction, the rights issue, 1 for 4. How much they say? It is 50 cents per share. And the share were quoted immediately before the issue. Quoted immediately before the issue is how much? 1. Is that what is the value of the share? 1. Its trading results for the last 2 years are like this. Profit after tax 2001 and 2000. Store the statement of basic earning per share for the year 31st December 2002. Including comparative means you have to show for 2001 also. Is that you have to show 2001 also. The step 1, what you have to do? We have to calculate theoretical X rights price. TERP. Any doubt, you stop me, okay? Any doubt? Now, what is the first one is particulars, is that? The second one is the number of shares, is it right? Number of shares. The third one is the price, and the fourth one is the value. Is that the? No. First we have to take the existing one, okay? First we have to take the existing one, okay? Prior to issue, is it? Prior to issue. How many shares are they prior to issue? How many they are using? They are using 4, okay? They are using how much? They are using 4, for 4 shares, is it right? They are using 4. Fine. What is the market value of that? The market value is 1. Okay. We should not take book value. We have to take market value. 4 shares are there. Price is 1. Total value is how much? 4 in dollars. In dollars. Now, what is the rights issue? What is the rights issue? They are issuing 1 share. What is the issue price of 1 share? How much is the issue price of 1 share? Third line.
50?
50 cents. On 1st July, the entity made a rights issue in the proportion of 1 for 4. At what rate? At
50.
50. This is the book value. Okay. This is the book value. I will write. Don't get confused. Is it right? Don't. 1 minute. This is the book value. Is it? Now, how much they have issued? They have issued it at 5, 0.5. It comes to how much? 0.5. Total is how much? Total number of shares are 5. Total value is 4.5. Theoretical X rights price equal to 4.5 divided by 5. It comes to how much? It comes to how much?
Nine. 0.9.
0.9. Is that? This is step 1. Step 2. Step 2 is bonus fraction. Market value per share divided by, can I write like this? Theoretical X rights price. Is it okay with you?
Yeah.
Is it right? What is the market price? Market price is $1 divided by 0.90. It comes to how much? Keep like that only. Okay. Do one thing. Don't get, this is the, don't calculate this, put it as a bonus fraction. Like this only. Don't do anything. Okay. Don't do anything. 1 minute, I will tell you. Don't do anything. Okay. This is the bonus fraction. Next, step 3, what we have to do? Step 3, weighted number of shares. Is it right? Step 3 is what? Weighted. Step 3 is weighted number of shares. Weighted number of shares. Fine. Now, weighted number of shares. How many shares are there? 1st January. Is it right? 1st January. Particulars. particulars, number of shares, n is number of shares, you have the bonus fraction, you have the year fraction, you have the year fraction, you have weighted shares. Fine. 1st January. 1st January. How much is the 1st January? How many shares are there? 4 million. Is it right? 4 million. Bonus fraction is how much? 1 divided by 0.9. Is it right? 1 divided by 0.9. Okay. Now what is the, when they have issued the second one? They have issued the second one on when? 1st July. Is that 1st July? 1st July is when this issued on 1st July. What will happen to the bonus fraction? January to July, January to June. January to June is 6 months. Is it right? January to June is how much? 6 months. How many shares are there? They have issued 1 million shares. How we got 1 million? How we got 1 million?
Given.
Where it is given?
In the questions.
Where it is given?
Issue at 1.
Huh? 1 for 4. Is it 1 for 4? If you have 4 shares, you will get 1. Is that? If you are going to have 4 shares, you will get 1. If you have 4 million shares, how many shares you will get?
1 million.
1 million. Is that? For 4 shares, 1 right issue. For 4 million shares, how much? Question mark. Okay? 4 million divided by 4 into 1. It comes to how much? Are you okay? Is
Yeah.
it okay?
Yes, 1 million.
Yeah, 1 million. Okay? Now, first you calculate this, how much you will get? First you calculate this one. $4 million times 1 divided by 0.9 times 6 divided by 12. How much you will get? Two, 1, 2, 3, 4, 5, 6, 7. Check. Is it okay?
Yeah. Yeah.
Now, how many shares are there at the end of the year? On July 1st, you have how many total shares are how much? 5 million. Is that? This 5 million fraction for the next 6 months. Is that? For the same rule. What we have done here, January to June, and here July to December. Is that? July to December. Fine. Now 1 minute. Is that? 1 minute. How much is there? It is 6 by 12. Is that? It is 6 by 12. Now you calculate 5 million into 6 by 12. $5 million divided by 2. That's all. 250.
Yeah. 250.
Is it right? Total it comes to how much? 472222. N. N
Yes.
means number
Yes.
of shares. Is it right? N means number of shares. Fine. Now, N means number of shares. Okay?
Yes.
Now. Slowly. Now you are getting the grip of the subject. Okay? Yesterday you are finding little bit difficult. Slowly you will get the grip of the subject. Okay? Now, what they are asking, what is the step 4? Step 4 is calculate the EPS. Okay? Step 4 is calculate the EPS. They are asking for 2002 and 2001. Is that they are asking for 2002 and 2001. How many shares are there in 2001? 2001, how much is there? 2001 is 320. Is that 2001 is how much? 320. How many shares are there at that point? How many shares? It is 4 million. In 2002, any doubt, stop me. Hussein and Sumaya, I'm telling you this. Anywhere. Is that I'm trying to put as simple as possible. Okay? 320 divided by 2002 is how much? What is the profits? 425 divided by 4722. How much is there? Put in cents. Okay? Don't put in dollars. Put it cents whenever you calculate EPS. Is it right? Whenever 425 divided by 4722. It comes to how much? 9.0 cents per share.
9.0, yeah.
320 divided by 4 million. It comes to how much? 8 cents per share.
Yeah, right.
Is it right? 8 cents per share. Fine. Now, what they are asking, I have not mentioned this. Is it right? Restated EPS. Restated EPS. Is it right? It is part of step 4. Okay? It is part of step 4. What they have done, whatever they have calculated the EPS, reverse of, we have to go back to 2001. Okay? You have to go back to restated EPS. Okay? Restated EPS. See on the left hand side, restated EPS. Okay? Restated EPS. They have taken the EPS, current EPS, is that previous EPS? They have taken the previous EPS 2000 into reverse of bonus fraction. Is that? I will write previous year EPS times reverse of bonus fraction. Is that reverse of bonus fraction? Fine. Now, previous year EPS is how much? This is 2001. Is that restated EPS 2001? 8. Okay, 8 cents. Is it right? 8 cents. 8 cents. Reverse of bonus fraction is how much? Bonus fraction is 1 divided by 0.9. Now reverse of bonus fraction is 0.9 divided by 1. Is it right? 0.9 divided by 1. I will write here, okay? I will write here. Reverse of bonus fraction. Reverse of bonus fraction. This is the formula, okay? Restated means you have to go back. How it will be if it is going to be from the beginning. Is that how it will be if it is going to be beginning? How much is there? 8 multiply 0.9 divided by 1. It comes to how much? It comes to restated EPS 7.2 cents per share. Just go through step 1, 2, 3, 4 slowly. Okay, I am putting everything on the display on the screen. Okay, everything I am step 1, 2, 3, 4. Slowly go through it. Once it is done, please let me know. Is it clear? Take your time, don't rush.
Doctor, question.
Yeah, tell me.
Step 3, 1st of Jan. And the question given on 31st December.
31st December or 1st of January, both are same year.
All right, okay. So first of all, we start from January, then
1 minute, 1 minute,
6
1
months.
minute. I just give me. I will. What they say on 31st, on 31 minute. 1 minute. I will make it more clear to you. On 31st January 2001, they issued the shares. Okay, they issued the share the issued share capital is how much? The issued share capital consists of 4 million. On 1st July,
Yeah.
okay, fine. 31st December 2001 or 1st January 1st January 2002 are same. Or you agree with this?
Yeah, yeah.
This is
2002, huh?
31st July 2002. This is 31st December 2002. Is it? This is, 1 minute. I will, 1 minute. No, it is a, this is 31st December 2002. Is it clear to now?
Yes, Dr. Clear, yeah.
Yes, Hussein, Sumaya.
Yes, doctor.
Hussein, where are you, dear? Fine. Can I go to the next one?
Yes.
You may feel little bit heavy, I can understand. Is that little bit heavy, you can understand, okay? Inshallah khair. Diluted earning per share, DEPS, okay? Diluted earning per share. What happens when number of shares, in simple words, when number of shares increases, earning per share will decrease. Okay, earning per share will decrease. Equity share capital may increase in future. Is it right? When it increases, this increase in shares will reduce. This increase in shares will reduce or dilute. What it will dilute? Earning per share. Number of shares increases, earning per share will decrease. The provision of diluted earning per share is to alert shareholders that it will have impact in future. Don't expect that number of shares are increasing. Number of shares increases, earning per share will decrease. Conversion, we are converting from bonds to shares, from preference shares to equity shares, from bonds to equity shares, any situation. In the example, it will be clearly given in the question. Converting the convertible bonds or loans to equity shares. We have the options, okay? You have the choice to convert or not to convert. Is it? You have the choice to convert or not to convert. In terms of warrants, warrants is nothing but an agreement. Is that basic principles of calculations the same? What is the diluted earning per share says that earnings, this is the first segment, okay? This is the first segment. You are adding another segment, notional earnings, the expected earnings, divided by expected number of shares. Is that notional means it is estimated. Notional is we are estimating, yes, a number of profits, how it will increase, and how many shares will also increases. Is it diluted earning per shares? Why diluted earning per shares? The basic means the basic EPS calculated above could be misleading to users. Sometimes it will happen, it will mislead the users. We want to make it very clear. What it says, I'm going the important points. Earnings will rise by savings in interest, no longer payable. See, you are going to what happens, you have the bonds. You are converting bonds to equity. In the bonds, you will pay interest. Is that? The moment it is converted, is that? The moment it is converted, what will happen? This interest will be saved. The moment the interest will be saved, the profit after taxes will increase. The profit after taxes will also increases, and the number of shares will also increases. Is it? The profit after taxes will increase, the number of shares will also increase. What proportion it will increase, it will not increase depending on the situation. Okay, that is what the diluted earning per share. For purpose of calculating diluted earning per share, the number of shares shall be weighted average. What we have done, the same rule follows. Okay, weighted average. We are not going to change anything. First, we have to calculate the basic earning per share. Then, subsequently, what we'll calculate? We calculate the diluted earning per share. Is that? First, we calculate the basic earning per share, and then we'll calculate the diluted. What is the thing? If we are again, I'm repeating. If we are converting the bonds, is it? If we convert the bonds into equity shares, what will happen? Then what will happen? Interest amount will be saved. Okay, we are not going to pay interest on the bonds, and subsequently what will happen? The number of profits will increase. Profits will increase. Number of shares will also increases. Fine. That's the simple secret of this. The principles of convertible bonds and preference shares are similar. Okay, the interest dividend will be saved, earnings will increase. They will have more earnings subject to tax. Okay, we have to pay tax, and the number of shares will also increase. See the thing. What happens? If I'm little bit here only, I will be little bit fast. Okay, I'm telling you. They have issued a convertible loan 1250. The loan carries interest of 8%. Is it right? What is the value of the amount bond loan? Stock is 100. They can convert in 2006, 2009, any time. Okay, in 2006 or into the number of shares. If you are converting in 2006, this many shares are there, 124. If you are convert after 1 year, 120, 115, 110. Up to 2006, number of shares, up to maximum number of shares issuable after the financial year will 124 per 100. Okay, then on 1.25 debt with this much shares. With 4 million shares already in issue, what will happen? The 4 million are there, you are adding, is it that? Which is how much? The convertible shares as well as the convertible shares as well as the old shares. Definitely the diluted earning per share will get affected. Okay, what we are doing is that what we are doing? They are saying that 1 minute. Is that they gave the information that 500,000 will be redeemable, irredeemable preference shares, and 1 million ordinary shares at 25 cents. The tax rate is 30%. They gave you the interest, how much profit before interest and tax, interest, profit before tax, and profit after tax. Fine. Now, just keep it in mind. Basic earning. How much is the profit before tax? 700. We take the same amount. Okay, we take the same amount. 706.73. They are paying preference day. Irredeemable. Irredeemable means non-convertible. Is it right? Irredeemable is non-convertible. We are going to pay rate of interest. Is that we are going to pay rate of interest of 50 and 50. Is that 50? I will put the things here. Is that how much is there? 500, 500, 500, 500 times 10 by 100. You will have earnings. Is that you will have earnings. Now you will calculate the earning per share. Is that 650 divided by 4 million? Is that 650 divided by 4 million? Is it right? And here also 650 divided by 4 million. Now, How we are going to calculate diluted earning per share? You have the same profits, is it right? Earnings are how much? 650, and from where we got it? We got it from here. Is it right? We got it from here. Is that we don't have any other thing. Income, less income. We have to see add interest. We have saved interest. Is that we are converting the bonds? We are converting the bonds. Is that we are converting the bonds? On that bonds, what is the amount of bonds? 1250. Is that 1250? Calculate on that. Interest on that. How much is the bonds interest? 8%. Is it right? 8%. $124 shares with respect to 8%. 1 minute. This is fine. Is it right? 1250 times 8%. 100. Okay. 1250 times 8%. And what about this? 2001, 2001, 2001, 250. 1250. Add interest 75,000. How? Huh? They have taken the same amount, but how you got it? That is not there. Okay. This much is the interest amount we are paying. This much we are going to have a interest saved. Okay. This is what the interest we have been saving. Is it? We have interest saving is what we have added the interest. Is it? We have added the interest. We don't have the exact from where they got it. Is it right? Now on this you will pay tax of how much? 30%. Is it 30% tax? This is profit after tax. Is that? This is profit after tax. Once it is profit after tax, what happens? What happens? 720. Is it right? 720 adjusted earnings divided by number of shares are how much? Two thousand one based on 2001. 1 minute. 720 divided by no 644 273 divided by 5162 500. 644 273 divided by this one 5162 500. Okay, 5162 500. Whereas 720 divided by 720 multiplied by 13, it comes to 936. How many shares are there? It is 1 million shares. 5.5. 5.555. 720 huh 720 divided by 555000. Check margin.
Yes, okay. 0.129.
129 or 13 cents. Okay,
Yeah,
13
12.9,
cents.
correct.
Okay,
Yeah.
the only thing is what you have to do is we have now I will profit after tax. You have to pay. Why we are paying preference dividends? Because preference dividends are irredeemable, not non-convertible. Okay, you have earnings, then you will have number of shares. We will calculate basic first. We will calculate basic earning per share. Is that first we will calculate basic earning per share, then we will calculate diluted earning per share. Okay, diluted earning per share
Yeah.
is how many shares we have converted, how many bonds you have converted into shares. Accordingly, we will calculate. Okay,
Okay.
we will do this. If the moment we will do test your understanding, it will be more clear for us. Okay, a company has 8.2 million shares at the start of the year. No new issue was made during the year, but on that date, it has an issue of 2.3 convertible loan stock. The loan stock carries an effective rate of how much? Effective rate of 10%. Assume income tax is 30%. Earnings is 2.208. The loan will be converted into one share. 90 dollar one share, 85, 80, 70. Okay, nominal. Calculate the diluted earning per share for the year. Which year? 2004.
Four.
For the year 2004. Basic earning per share. Okay, basic step 1. Okay, don't. Okay, basic earning per share. Okay, how much is the earnings? Earnings are how much? Earnings are 2208. Is it? Earnings are 2208. How
Zero
much
eight. Yeah.
they have to pay interest on the 2.3? Okay, they have during the year ended, but on that date it has an issue of 2.3 million. On this 2.3 million, you have to, is it? On this, see, 8.2 million shares in issue at the year end. No issue has been there. Now, 31st December, but on that day they have issued on non-issue. It has issued 2.3 convertible bonds 2006 to 2009. The loan stock carries an effective rate of how much? 10%.
10%, right?
Okay, the loan stock carries an effective rate of how much? 10%.
10%.
Means that 10% you are going to save. Okay, 10% you will save. If you are saving 10%, then you will have to pay tax on that saving. Okay, tax on that saving. I will change the color. Okay, now this is called as notional interest. Is it right? Notional interest. How much is the notional interest? Saving. Is that notional interest saving? Is that add? Is it right? Add notional interest save. 2.3 times 10% is equal to, it comes to how much? 230,000. You are saving how much interest? 230,000. Now, on 230,000 saving, you have to tax on savings. Is that tax on savings? What is the tax rate? 30%. What is the
30%.
tax rate? 30%. 230 times 30%, it comes to how much? 69,000.
69,000.
This much, okay, this much, the moment you save, on that you have to pay, minus 230. It comes to how much? Your savings will be increased by how much? Your savings will be increased by 160. This is nothing but notional savings. Is it? This is nothing but notional saving. How much you got? Total savings, is it what? The revised savings. Is it? The revised savings is how much? 2208 plus 2208. It comes to 2047. Is it clear?
Yeah.
1 minute. 2208 plus 161. How much? No. How much?
2369.
2369. Is that 2369? Now, got it? Okay, this is the revised savings. Now you have to get the revised number of shares also. Is right? You have to get the revised number of shares. Existing shares are how much?
220.
Existing shares are how much? 8.28 million shares are there. 8.28 million shares.
Okay.
Is it right? Now, notional shares will be how much? Convertible. Is it right? Notional shares will be how much? If convertible. Is that it has issued a convertible loan stock 2000 if convertible. Is it right? First you take if convertible. We have to take only the first choice. Is that if they don't mention anything, we have to take only the first choice always. And keep it in mind. They will give you this information, but this information they will not test. Okay? We have to take the first. We are assessing for the first option. Okay? We are assessing only for the first option. Bond value, is it right? Bond value, total bond value. Okay? Total bond value into conversion factor. Total bond value is how much? 23 million. Conversion factor is how much? 90. Is it right? 90 by 100. Are you clear about this?
Yeah.
Is it right? If you have 100, they will get 90. How many shares they will get? 3 times 90 over 100. 2070.
20700. Yeah.
Any doubt? Ask me. Okay, I know where the students will get doubt. Is it right? How much will get? This is the revised shares. Is it? This is the diluted earnings per share is equal to revised earnings divided by revised shares. How much revised earnings is how much? 2369 divided by 10350. It comes to how much?
Revised. Yes.
22.89 cents per share.
Yeah, 22.88.
22.88.
88, yeah.
Little bit heavy now, Mazin.
Little bit, yeah.
Yeah,
We need to practice it twice.
little
but
bit
it will
heavy.
be fine.
Okay.
Yeah. Doctor, only for 2006 we have to calculate? Where it's given in the
2004. Yeah,
question?
only yeah. Good question. They will give you always. They will give you for two. They are giving this option to you. Okay, they are giving you the option. If you are having 2006, you will get 90. 2007 85, 80, 2008 87, 2009 75. This they will give option. We are not going to calculate for every year. Okay, we are only to see what they say. They are saying that what is the diluted earning per share only for 2004 with only the first option.
Okay. So when they will say 2004, what is the first one we will take?
Always. In the next questions also, is it right? We follow the same trend. Okay?
Good.
They give a lot of theory explanation is there. Okay, lot of theoretical explanation is there. Fine, no problem. We will go through it, but we will go through it. Okay. What is the warrant? See an option. Hussein, where are you, dear? I am not listening your voice.
He is not in the class.
Allah Kareem, why?
I don't know. Suddenly he is not here.
He's. I am seeing him now.
Yeah. Now he's asking to admit.
Salaam alaikum, Hussein. Where are you? Hussein?
I have connection problem. I don't know what happened.
Okay. Immediately send me message. I'm asking you for the last 20 minutes. Fine. Now, the almost the last one. Okay, almost the last of the one which you are going to do. Okay, options of warrant is they have the right to buy. You have the option. You can buy. You don't buy. There is no compulsion. Is that cash is received by the entity at the time of option is exercised. Diluted earning per share must allow this. Okay, they have the option. Some people will go for this, some people will not go for this. the total number of shares on exercise of an option or warrant split under two categories. The number of shares that has been issued if the cash received used to buy shares at a fair value. Yeah, options means you have the option. Once some people take the options, convert it into shares. Some people say that we don't want options, give us back cash. Is it right? Give us as back. The remainder which are treated like a like a bonus issue, that is having been issued for no consideration. Again I will repeat, this is the key point, okay? This is the most, wherever the symbol is like this, the total number of shares issued on the exercise of the option or warrant will be split into two. Okay, it will be split into two. The number of shares that would be issued if cash received has been issued to buy shares of fair value. Some people will buy. When you are buying, you will buy on a average price, opening price plus closing. They will give you average price. Using the average, the remainder, whatever the balance, is it right? The remainder, which will be treated as a bonus issue. Is that bonus issue? Means when you have the option to convert, right to buy shares at some point in future, at a very predetermined, in future they will say that now you are in 2024, is it right? They say that in 2026, 2024 the price is 2 riyals 5 paisa, okay, 2 riyals 50 paisa. They say that in 2026 you are going to buy a share of 2.650, predetermined price, okay, predetermined. At the time of issue only it will be fixed, okay. That was the number of options. Wow, the number of options is there. You have the fair value minus exercise price divided by fair value. They will give you in the question what is the fair value, what is the exercise price. By that you will get what, how many shares you can convert into with the using of the options. Is it? Now they have mentioned, first go through it. That January 1st a company has 4 million shares. They have the issue option of further 1 million shares. The profit is how much? 500,000. During the year, see the thing, the average fair value is how much? 3. They gave you the fair value, they will give you the exercise price also. How much? 2. Is it? Basic earning per share is, they have given profit after tax, profit for the year, is it? Profit for the year, and number of shares are how much? 4 million shares. Earnings is how much? 500,000. Number of shares are 4 million. We have taken the fraction, okay. What is the fraction? Is it? What is the fraction we have taken? We have taken the fraction of fair value minus exercise price divided by fair value, okay. Fair value minus exercise price divided by fair value. Getting a point? I am writing here. This is the fair value, this is the exercise price, this is the fair value. Is it that? This is the fair value. Fine. Simple way, okay. How much you got it? 33. They have done this also, but this is the simplest way, simple way, easy way, okay. Easy way is how much? You follow the thing, 3, 3, 3, 3, 3, okay. Now they have taken the earnings, number of shares plus options. How much is there? From where we got this? We got this from here. See, they have made this also. Is it right? This also. What I'll say? Prefer this. Prefer this method. Is it? What we get? Diluted earning per share is net profit for the year divided by the total number of shares, including what? Including options. Simple one. Okay, it is not difficult as such. Okay, it is not difficult as such. Okay, fine. Is it okay about this? Illustration 6. Is it okay how we have calculated the diluted
Yes.
earning per share?
Yes, sir.
Okay, now same thing, is it? Same thing, how it is there. A company has 8.2 million shares, okay, issued at the start of the year. Is it? And no issue shares by 31st December. But on that day, they have options are how much? 920. Is it? 920 ordinary shares. At what price? At 1.7 per share. The average fair value is how much? The average fair value is 1.8.
0.80.
Is that the average share value is how much? 1.8. Is it? Average share value is 1.8. Excess the fair value is how much? Fair value is $1.8. Exercise price is how much? Exercise price is how much? They can get it at what rate? 1.7. Okay, they can get it at what rate? 1.7. 1.7. Okay. Now, what is the number of options? Is it right? First you take number of options are how much? Number of options is what is the amount of stock? What is the value of
920.
option? Value of options times, I will write like this, fair value minus exercise price divided by fair value. Number of options is how much? 920 times 1.8 minus 1.7 divided by 1.7. How much you will get? 1.81, 0.1, 920 times 0.10, 1.70. How much? How much? Why I did
54117.
why I did one mistake. Here it is. Excess fair value 1.8. Is that fair value 1.8? I have written 1.7. Okay, fair value 1 point. Mistakenly I have written 1.7. 0.1 divided by 1.8. It comes to how much?
91999.
5-1.
9200.
5-1.
51111. 5 times 1.
Is it okay?
Yes. 5 times 1.
Huh.
Yeah.
We have what? We have the, how much is the profits? Profits is how much? Profits are 2208. Revised shares are how much? Existing is how much? Existing is 8.28. Add warrants, options, okay? Options, how much? 51111. It comes to how much? 828 plus 51111. Check.
8331111.
Diluted earning per share. Is it right? 833111. 833111 divided by how many shares are there? No, sorry. 2208 divided by 8331. This is number of shares. These are profits. Is it right? Profits divided by n. How much you will get?
26.
26.50
50.
cents per share.
Yeah. 26.50.
Is it clear?
Yes, doctor.
Fine. These are the major ones. Okay, these are the major ones we have done. We have done normal earning, basic earning per share. We have done with respect to bonus. We have done with respect to rights issue. We have done with respect to theoretical X rights price, that is the right issue, and we have done with respect to warrants. Is it with respect to warrants? They have mentioned, is it a price earning ratio? Remember this formula, somewhere we will use, okay? Price earning ratio is nothing but market price per share divided by earning per share. Remember, don't worry about that. I will explain to you when it is needed. Is that the means earning per share term talks about what? Always how much you are earning on your investment. Okay, if you are investing one, how much quickly you will recover your investment. That is what we are talking in terms of earning price earning ratio. Is that price earning ratio? Is the measurement for fine. Is it? These are limitations of EPS. Okay, these are limitations. They will not ask morely. Okay, but read. Okay, but read. If you are coming across in any questions, I will again explain you. Okay, here little bit. Okay, this is also very selective. It shows the current year EPS if all the diluted potential. Diluted means the how the earning per share will fluctuate. Okay, it also talks about the trends, about how it happens in the previous performance. We have done something called as, we have taken restated EPS. Is it restated EPS? Okay, that's what it says. Okay, diluted earning per share. Can we complete this and we'll stop? Yes, Mazin.
Can we complete tomorrow, doctor?
Okay. Okay.